Ladies and gentlemen, if I may, colleagues, if I may invite you to take to your seats, and I will take you from our director on the countdown for the live switch over. But if I may please invite you to take your seats, and to all our members of the executive team, in our Q&A session, we'll still invite you to support in responding to any questions that may come up. So please be conveniently seated so that we can get the roving mic to you to support us with the Q&A. I'll take cue if we're live, but I'm also getting this feedback. You let me know. Good morning, ladies and gentlemen. My name is Tshepo Ramudibe, Head of Corporate Affairs for the Industrial Development Corporation. On behalf of the board and the executive management team, it is a pleasure to welcome you today as we announce the IDC's annual results for the year ended 31 March. We thank you for navigating through traffic this morning to join us for this presentation. We also do have a virtual audience, stakeholders that are joining us virtually via web link. With the formalities, just notices that you need to be aware of. The IDC, we posted the SENS announcement this morning, confirming that the annual report, the annual financial statement, and additional information required as per regulations has been posted and is live from our website. Today we have an engaging program that has various colleagues, leaders of the IDC, but before I kick off, I would be remiss in not acknowledging our guests this morning. We do have the pleasure of Minister Godongwana with us today in his acting capacity as the Minister for Trade and Industry. We have our chairperson and members of the board, and our newly minted chairperson, Ms. Gloria Sorobe, and members of the board. It is indeed a pleasure to have you all and supporting us in the delivery of the IDC's annual results presentation. Our program this morning will be quite punchy. It will feature the chairperson, current chairperson, Ms. Busi Mabuza, who will then be followed by His Honorable Godongwana, the Acting Minister for Trade and Industry. Following that, we'll have the CEO, Ms. Makhoshi Lekete, come to the stage and join us to deliver her maiden results presentation. Then followed by our Chief Financial Officer, Mr. Isaac Malevu. Following the results presentation by both, we will have a question and answer session. So I invite all of you in the room, all of you joining us virtually, to interact with us and pose questions. I will have access to the iPad that picks up, that lists the questions. We'd ask that as you introduce yourself, you confirm not only your name, but the company you represent, but also, once the panel members have been composed, indicate who you specifically are asking the question to. So without further delay, it is my pleasure to welcome our chairperson, Ms. Busi Mabuza, to kick off the proceedings with her welcome remarks. Thank you, Chair.
Thank you so much, Program Director, Mr. Tshepo Ramudibe. Ladies and gentlemen, esteemed stakeholders of the Industrial Development Corporation, board members present here today, both of the outgoing board and the incoming board members, members of the executive, our friends in media, colleagues, good morning to you. As we gather here to reflect on the IDC's performance over the 2024-2025 financial year, we do so against a backdrop of a complex and in evolving economic and geopolitical landscape. This year marks, you'll be pleased to know, the IDC's 85th anniversary, a milestone that underscores our enduring commitment to South Africa's industrial development and inclusive economic transformation. The IDC has remained steadfast in its dual mandate of delivering financially sustainable returns while driving inclusive, jobs-rich industrial growth. This despite the subdued domestic economic growth, persistent structural challenges, and global uncertainties which range all the way from the trade tensions and the withdrawal of key international support for some programs. The corporation has deepened its impact across key sectors under the leadership of a very capable ExCo team supported by the board. Most notably, the impact has been through strategic interventions aimed at preserving industrial capacity. We've expanded support for Black industrialists, for youth entrepreneurs, and small-medium enterprises. Catalytic investments in green hydrogen, renewable energy, and critical minerals have been made. And we're proud, ladies and gentlemen, that we've been able to successfully issue our inaugural sustainability bond. While the financial performance was impacted by external pressures, and this will be reflected, of course, in the reduced profits and increased impairments, the IDC continued to demonstrate resilience, agility, and purpose-driven leadership. Today, as our program director has already indicated, we're privileged because we will hear from our Minister of Finance in his capacity as the Acting Minister of Trade, Industry and Competition during our minister's absence. We'll hear from our very first female CEO, Ms. Makgoshi Lekete. And we will, of course, hear from our Chief Financial Officer, Mr. Malevu. The latter two will unpack the operational and financial performance of the corporation in greater detail. Their insights will illuminate how the IDC has navigated the year's challenges, delivered on its strategic priorities, and positioned itself for future impact. Ladies and gentlemen, on that note, I thank you for your presence, and I'll hand back to our program director. Thank you for joining us.
Thank you, Malene. Madam Chair, thank you very much. Chair, thank you for the honor of bestowing me with the privilege of introducing our distinguished guest of honor, Minister Enoch Godongwana, Minister of Finance. As you all know, the Minister has played a pivotal role in shaping not only South Africa's economic landscape. He is our banker and helps us as we determine the fortunes of our country. But with the economic activities that we play, there's alignment in what we do, what the Department of Trade and Industry does, but also support we get from National Treasury. Mr. Enoch Godongwana, our minister, has an illustrious career that books could be written about. His career spans public service, the private sector, but also a contributor to the NEDLAC, the formation of NEDLAC, and processes that happen there. Not only is he respected in the labor movement, but across boardrooms, international podia, and the role that he plays, but also the input that he brings. So it was with that, we are honored, Minister Godongwana, for you taking the time to be with us this morning. Your presence affirms the importance of the IDC, of the Department of Trade and Industry, and the role that we play in South Africa's industrial and developmental agenda. So ladies and gentlemen, without further delay, it is my pleasure to invite the Honorable Minister Godongwana to join us on stage for his opening remarks. Thank you.
Chairperson, we are still the chairperson, not the first yet. Chairperson of the Board of IDC, Ms. Musi Babuza, the CEO, Makhoshi Lekete, used to be my DDG. The IDC stole her. Board members and executives. You know, when you mention NEDLAC, the person who's responsible for NEDLAC is sitting over there, Bobby Godse. He's one of the skilled negotiators in this country. Who, during those days, kept us busy. If I may digress a bit, when we established the change the labor legislation after the 1994 breakthrough. Tito Mboweni, by the way, was the Minister of Labor. We had to create 5 aside, 5 from government led by Tito Mboweni, and 5 from business, which was led by Bobby Godse. We crafted the labor legislation that exists today and the institutional framework for social consultation, which is NEDLAC. You have done a great service to this country. It's one of the things you've done, but you've done a lot for the country. But let me do what I'm asked to do today as in my job as moonlighting as the Minister of Trade and Industry. On behalf of my colleague, Minister Tau, I'm pleased to join you in marking the IDC's annual results for 2025. But I was told it's an integrated statement, which includes more than one financial year. The IDC continues to play a vital role in South Africa's economic development. May I say, in its more than 8 years of its existence. In a challenging global and domestic environment, its countercyclical mandate remains essential, stimulating industrial investment, preserving capacity, and enabling inclusive growth. Over the past year, the IDC has invested in energy, infrastructure, critical minerals to support the green transition. May I also divert in my capacity as Minister of Finance add that that's the sector over the next 3 years we'll also be spending a lot of money on. In energy alone, we'll be spending about 219 billion rand. In roads, more than 400 rand. That's where you guys have got to play. Not only IDC, but all other DFIs and all other investment people that are here. I passed through a crowd, I say, ABSA. We want to see cranes. That's what the IDC has invested on over the past year. It has also expanded support for Black industrialists, youth, and regional development. Strengthened industrial capacity in key sectors such as steel, mining, and logistics. Looking ahead, the IDC has an important role to play in driving job industrialization, job-rich industrialization, mobilize blending finance and strategic partnerships, supporting localization, innovation, and regional integration under the African Free Continental Trade Agreement. We commend the leadership of Ms. Mabuza and welcome Ms. Lekgethe's first result presentation. Our appreciation also goes to Mr. Jarvis and the team for their continued commitment. The IDC remains a cornerstone of our industrial policy and a key driver of inclusive, sustainable growth. And I thank you. I can tell you this is the shortest speech in my life. You can say I'm not doing it in my own capacity. I normally tell the story that I was asked to open a NAFCOC meeting in Mzamba. Poor guys expected me to just open for 10 minutes. I spoke for 1 hour, 10 minutes. That's me.
Thank you, Minister Godongwana, for your remarks and reflections in your two roles. One as the Minister of Finance, accordingly, but also standing in for the Minister for Trade, Industry and Competition. And with that said, to set the scene, it is my pleasure to invite Ms. Makhosi Lekgethe to take to the podium to deliver her maiden results.
Good morning, ladies and gentlemen and colleagues. Minister, my former boss, it's my pleasure and really my privilege to thank you for honoring our results announcement in your capacity as representing the shareholder minister, Minister Pakstau. And this is a relationship that I certainly have seen work very well between the two of you. So I am sure this is not the last time you grace us with your presence. We will see you. Let me also acknowledge the chairperson of the board, Ms. Mabuza, and her team, and really express my gratitude for the warm welcome that you afforded me joining the IDC. I also want to acknowledge the incoming chairperson of our board, Mrs. Sirobe, with your team, and you can rest assured the IDC will welcome you, I'm sure, and provide you with the support that they provided me. We are also joined by the EXCO team of the IDC, who have really shepherded me through this process over the last 7 months. And I want to thank David before he leaves the room. And David, the role that you've played, really supporting me in settling down, is really appreciated. And I hope you're coming back because the questions with these results are yours to answer. It's my privilege to present the IDC's performance for the financial year ending March 2025. And the message that we've heard this morning is very clear, both from Minister Godongwana, but also from the chairperson, that the IDC's mandate, rooted in its 85 years, which we're celebrating this year, remains very relevant. It really remains relevant now as it did in the past to drive inclusive and sustainable industrialization in South Africa and in the rest of the region. we continue to focus on the following development outcomes: jobs-rich industrialization, promoting greener economy, support for exports, empowerment and transformation. Our strategy is aligned to the medium-term development plan. It's aligned to the National Development Plan and other various national master plan which the IDC has spearheaded their development. And may I also mention the Africa Free Trade Continental Agreement. In the next slide, we just highlight some of the challenges that we are facing in this operating environment. The South African economy expanded marginally over the past 12 months to March 2025. Real GDP grew by 0.4% year-on-year, following a 0.5% rise in the preceding year. So the operating and trading conditions remained difficult in the financial year. And this was also heightened by the global environment that South Africa finds itself in. This affected the IDC's business partners' performance, appetite for our funding, investment decisions, and in turn, you will see our performance. The next slide, we just highlight some of the challenges in the operating environment. And our business partners have found themselves being affected by load shedding, have found themselves affected by logistics constraints. And as a result, the sectors that we fund, being manufacturing in the main, this has translated itself in how it has performed nationally. In the official numbers, as you've seen, contracted by 1.2%. Mining sector has experienced contraction for a number of years. And this, as I said, are sectors that the IDC supports. However, some positives in the economy have emerged. Reduced load shedding early in the year, which, thanks to my counterpart at Eskom, Dan Marukani, we've been able to sustain. Improved port operations, and also the declining inflation. Next slide speaks to the performance of the IDC. So as I said, despite these setbacks in the economy, the tough operating environment, the IDC was able to increase its disbursements to 16.3 billion rand, which is a 2.5% increase from the previous year. We were able to create and save jobs totaling 15,732. And for me, what is more pleasing about these results is the funding that we have in transformation, which is one of our key pillars. We've managed to increase funding for transformation to 26.6 billion. And we also maintained a strong asset base of 144.3 billion rand at the company level. And just the next slide shows the distribution of IDC funding. Given our mandate and given that most of the business partners or industries that we fund are really at the cold front of this economy, our funding, the bulk of our funding has gone to those sectors, but I am pleased to report that we've also funded the startups. Our funding that into the startups has been going up, and I'm pleased to report that we funded 5 billion startups, and we've also funded 4 billion in expansions. At the same time, we played a counter-cyclical role in supporting sustainable businesses that are in distress. And as you know, the auto sector is one of those that will face more challenges going forward, and the IDC has supported companies in that value chain. And all of this we do in efforts to preserve industrial capacity. In terms of sectoral performance, chemicals, mining, machinery, and energy were the leading recipients of our funds. Just to zoom into transformation, to show the really impressive results that the IDC has with regard to funding transformation, as transformation is key in our development outcomes and in our funding activities. In this year, total transformation funding amounted to, as I said, 26.6 billion. We've invested 23.4 billion to Black industrialists. Youth empowerment funding totaled 1.7 billion. Funding for women-empowered businesses totaled 5.6 billion. The net impact of our funding activities is reflected in the next slide, which shows the overall portfolio of the IDC. Our current portfolio under management is 93 billion, of which 11 billion is invested outside South Africa. Our portfolio is comprised of 76% debt and 24% equity, reflecting a strategic use of our risk-bearing capital to support the growth sectors. Over 94% of investments are aligned with industrial policy priorities, focusing on manufacturing, mining, energy, agro, and infrastructure. And I must say, in our pipeline for this year, we are seeing some very strong and sound agro business coming up, which is so important for this economy. In the next slide, we highlight our portfolio across the continent. And I must say that I'm quite pleased with the role that IDC is playing in the continent. And it's led by the strategy that the corporation has put in place. And as you can see, we are mostly invested in Southern Africa. In Southern Africa, we have, just to mention one investment that was approved, which is an abattoir, a beef abattoir in Namibia. We also have rare earths mining development, which we are sponsoring in Malawi. And we are also invested in East Africa. We are in the DRC. We have a tin mine in the east of the DRC, which is performing quite well. And we also have a graphite mining in Tanzania, in Marange. So the purpose of the IDC really goes beyond South Africa and into the region. In the next slide, I just want to reaffirm the message that the chair and the minister said, that the IDC strategic priorities, as embedded in its corporate plan, remain valid now and in the future, and it has set itself an ambition to do substantially more going forward. So looking ahead, the IDC will continue driving jobs-rich industrialization, deepening regional value chains, and we will do this in partnerships with others. We are quite pleased that we have been approached by some of the development partners to join them as we expand our investment into the rest of the continent. Our transformation mandate remains important to us, and more importantly, we will enhance our operational agility and client experience. Achieving all of this is in line with our core and joint mandate of development impact while remaining financially sustainable. And it is this dual mandate, colleagues, that I would like us to focus on. Because on the one hand, when the CFO Isaac comes, you will understand better why the mandate of the IDC has to remain that of playing a counter-cyclical role in times of trouble, but also of finding new industries of the future that are going to support this economy. Thank you very much.
Thank you, Makhoshi. Good morning, ladies and gentlemen. I also want to acknowledge the Honorable Minister, Shareholder Representative, DTIC, the board members, Chair of the Board, Chair of the Audit Committee, our partners in the debt capital markets, the lenders, investors, the colleagues, and all protocols observed. With regards to the financial performance of the IDC, the narrative is really underpinned by a tough economic environment and muted commodity prices. You will see as I unpack the numbers that our earnings are low, primarily driven by lower than expected dividend income from our investment companies that experienced operational challenges. We also noted weak earnings from our subsidiaries and associated income companies. We are pleased, though, that on the back of a strong loans and advances growth, we did see an increase in our interest income. On impairments, they were high, as alluded by Makhoshi, largely driven by the favorable decline at the back of weak commodity prices. We also, as IDC, had to strategically intervene to preserve manufacturing capacity, in particular in the steel sector. We've also noted an increase in some of our business partners who are experiencing financial distress in this tough economic environment. On a positive note is that our capital remained robust at a gearing of 33%, well below the risk appetite limit set by the board. We have adequate cash buffers, and our non-performing loans are adequately covered. The next slide is really just to give you some financial highlights, and I will unpack this. At a group level, our revenues are down 7.6% at 21.7 billion. Profit after tax is down 95.6% at 329 million. Total assets down 13% at 134.5 billion. Reserves are down at 94.1 billion. We're able, notwithstanding the tough economic environment, to be able to issue an inaugural sustainable bond of about 2 billion, and we continue to enjoy the support of our lenders, and our borrowings are standing at 31.1 billion. At company level, our revenues are down 11.3%. Profit after tax is down 74.5% at 1.8 billion. Cost-to-income ratio, notwithstanding a decline in our revenues, remains within our sustainability levels of between 30% and 40% at 30.8%. Our gearing, as I alluded, is 33.4%. And we did see an improvement in our impairments ratio at 30.6% compared to the prior year at 36.3%. The non-performing loans ratio is down, or rather is down at 41.7% when you compare to the prior year, which was 44.8%. Although it remains elevated, we are comfortable that as the IDC, we are adequately covered. Just to unpack the net profit before tax, net profit after tax in terms of the decline, profit before impairments declined by 17%. And you will know that it's largely driven by the dividend income decline. The interest income did offset that decline slightly. Finance charges did go up slightly on the back of increased borrowings. When you then take into account impairments and taxation, the profit after tax at the company level is down 75%. And I did highlight that we had to increase our impairment charges to recognize our intervention strategically in some of the sectors where we needed to preserve the manufacturing capacity, but also protect the downstream sectors. With regards to, at the group level, when you post the impairments and taxation, we noted that our income from associates companies did come down, and that's really a reflection of the profits that have come down on the back of operational challenges, but also a weak commodity prices, and therefore resulting in a profit after tax at down 96%. The next slide just really gives some indication of what is the quality of our portfolio. In terms of stage 1, stage 2, and stage 3, you'll know that stage 3 have come down, which shows an improvement in the quality of our book. Stage 1 and stage 2 has increased in line with our management of impairments in originating more low to medium risk. We'll continue to invest in startups and invest strategically in some of the sectors as part of our development mandate, and therefore you will always have an elevated stage 3. The next slides just reiterate the point that our non-performing loans are adequately covered. We have enough provision against the non-performing loans at 56%. So we are comfortable that after taking into account the security and the collateral that we hold, at 56%, we have adequate coverage. The next slide just explains how lumpy our non-performing loans are. The top 5 accounts for 54% of our non-performing loans. So if we were to exclude these top 5, our non-performing loans ratio will show a much reduced number. And the reason why we still have these top 5, some of them is because as an IDC, we have to continue to invest for South Africa in terms of strategically intervening in sectors which talk to our developmental mandate. In some of these business partners, there is an ongoing litigation. So these are assets that are performing or they are not loss-making. However, there is ongoing challenges with them. And the last one, we are currently exiting. Moving on to the IDC funding model, again, just to acknowledge our debt capital market partners, the lenders, the international DFIs, and also the institutional investors who continue to support the developmental mandate objectives of the IDC. Just to give some color, on a yearly basis, we normally have around 30% of the funding gap, which is closed by the debt capital markets. About 70% is coming from internally generated cash flows, which then enables us to support our developmental mandate. The next slide is really to demonstrate that we do have very diverse sources of funding, and we're pleased with the strong return to the bond market after a 4-year absence. We were well received, and we did note that the reference point did come down as a reflection that the credit risk of the IDC is, when you take everything into account, it does reflect a strong organization with adequate capital base and buffers. The next slide is really to explain that we are managing our maturities well. In the prior year, we did highlight that we do have a spike in FY 2027. We are pleased that the negotiations to manage that are going well. We will either refinance or switch this into a sustainability bond, which then takes care of the spike. I'm moving on to the corporate governance. As IDC, we remain committed to good corporate governance. Our financial statements are prepared in terms of international financial reporting standards, and the audit opinion remains unmodified. We do comply with all the requirements of the JSE and also PFMA. When it comes to a Public Finance Management Act, we do have irregular expenditure of about 4.5 billion in the current year. We confirm that none of this irregular expenditure reported was a result of fraud, corruption, or criminal conduct. These are largely driven by our subsidiaries who are used to competing in the private sector, such as Fosco, but we are pleased that they continue to improve their procurement policy to align with the PFMA and the PPPFA. And we do support them that in the future we should see these irregular expenditure amounts coming down. As I conclude, I do want to say that we are pleased with the increase in our value of our disbursements, which resulted in increase in the loans and advances. On the back of that, we did see some improvement in our interest income. We also are pleased with the oversubscription of our inaugural sustainability bond, which really talks to the confidence the market has on the IDC. We acknowledge the headwinds. Impairments remains elevated. Our efforts as management to manage this down continues, notwithstanding the sluggish GDP growth domestically, which will affect our business partners. We also acknowledge that there is low global demand for commodities and resulting in softer commodity prices. But as IDC, we will continue to deliver on our developmental mandate. Before I sit down, I do also want to give thanks and acknowledge the support that as IDC we've received from the outgoing board, chair of the board, chair of the board audit committee, and also the colleagues from the IDC, the lenders, and everyone who's been a stakeholder to the IDC, the shareholder representative, the DTIC, who continue to provide support to ensure that we receive concessionary funding that can be blended with the funding from the capital market so that we provide our business partners with a reasonable cost to support them in their business activities. Ladies and gentlemen, I will pause here. I've been asked to then hand over back to Tsepo to facilitate questions and answer session. Thank you.
Save time.
Thank you, Isaac, for the commentary, but also the presentation of the financial performance. And in your closing remarks, you did mention the support we receive from not only partners in the funding space, but also colleagues within the IDC. But we also would want to add to that list the support we receive from the Department of Trade, Industry and Competition, the Minister in absentia, but we do have Dr. Simpuya Hamilton with us, who's our Director General in the department, but also a key promoter of the work that the IDC does. So thank you, sir, for joining us, but also helping us deliver these results in the context and the climate that we have. At this point, I would also want to invite Makhoshi to join Isaac on the stage for our Q&A session. And also invite our acting Chief Operating Officer,
Well done.
as delegated by and invited by the CEO to join. And I know we hadn't planned for David, so I'm going to ask for one of the roving mics to be given to David to ensure and support his participation. Ladies and gentlemen, thank you for joining us for the results presentation for the year that was.
One is fine.
And for colleagues that are joining us online, I do have access to the iPad for any questions coming through. So for those in the room, if you do have questions, I'll ask that you raise your hand and indicate, and a roving mic will be brought to you, and ask that you introduce yourself and the company you represent. Thank you very much. I'll take the first round of questions. Makhoshi, if I may kick off with you. In your remarks and outlook, beyond just deepening, the work and the mandate of the IDC, it's really a question about relevance. And from your vantage point and the kind of work that the IDC has done, going forward, what are the critical levers that you're seeing as focus areas for the IDC to participate in?
Thank you, Tsepo, for that question. As I said, for me, the mandate of the IDC remains relevant. Why do I say that? If you see from the history of the IDC has contributed to industrialization in this country and supported some of the entities that are now multinationals, globally recognized. But the IDC has also, beyond that, been able to support us in our transformation journey. And for me, that remains a relevant mandate for the IDC to continue supporting. Also, because South Africa is a small open economy, it means that external headwinds are going to affect us more than other countries that are perhaps not as open as ours. Therefore, in order to support our companies, especially the exporters, we need to remain agile and ready to support them when they experience this. And we are seeing it currently. But another important mandate of the IDC is really the mandate to start new entities. The new entities in new sectors. And the IDC has done a lot of work, continues to support government in that sector. You will see in some of the master plans that have come through, especially in supporting the green economy, in green hydrogen, in the cannabis master plan, which we are participating in, especially the IDC, we are hosting the desk that's doing the work there, and other various sectors. So this entity and its mandate remains relevant. And these are the sectors that it is supporting. Other areas, as I said, it cannot be that the African continent continues to be a net importer of food. And the IDC, you will see us participating more in the agro sector to support this sector across the value chain and ensure that we contribute to the increase in food production. Our success has been in the industry sectors that we've supported, and our efforts with our green economy strategies is really to try and support them to move more towards renewable energy, to increase the grid, but also given that the legislation now allows entities to support them in that drive. Thank you.
Thank you, Makhoshi. Lady?
Good afternoon, everyone. I'm Farisai from the AFD, and my question is directed to the CFO. How effective has the recovery and restructuring efforts have been in reducing the non-performing loans burden? Thank you.
I did. Is that the only one? Perfect. Thank you very much for the question. We've seen an improvement. If you look at the non-performing loans ratio, it's down 41.7%. And part of the reason is that the restructurings that we're doing in terms of cleaning out our loan book, where we've recognized a need to either exit or a need to renegotiate the terms or modify the terms of the loans, are bearing fruit. So I would say that that work continues, and we are pleased that the restructurings and turnaround that we initiated about 3 years ago, they are starting to bear some fruits, as evidenced by the improvement we are seeing. Thank you.
Thank you. I do have a question online from Naila Ibrahim at News 24. And Isaac, I will pose this to you. Could you explain the 13% decrease in the asset base for the group, which was impacted by Sasol, BHP, and Kumba Ore? The corporation said it was looking into a reallocation strategy to stabilize investments and protect itself against downturns. What would this look like, or what's been the impact of that?
I'll take that. Yeah, indeed, we've seen a decline in the commodity prices. We do have the top 3 listed investments, which account for, in terms of equity investments, which account for about 80%. And to the extent that they fluctuate, they do have an impact on our fair valuations. And indeed, at year end, largely driven by Sasol, followed by Kumba and BHP, there was about 15.9 billion decline year on year. In terms of the reallocation of assets, I think these 3 counters, as we mentioned in the prior year, they are very strategic to South Africa and strategic to the IDC. And therefore, the reallocation really has to talk about to the how we originate our investments going forward, largely looking into supporting the green economy, renewable energy, really looking at investments that support the diversification of our investments. Indeed, there is the review of the portfolio will continue. There is a new board now, there's a new minister as well. I mean, that work was started by the outgoing board, and we continue to review that. But I think I must re-emphasize that, as I said, they remain strategic to the IDC and South Africa at large. But we are pleased that our capital base remains resilient, as evidenced by the debt-equity ratio at 33%, which is below 60% approved by the board and below the 100% debt-equity ratio in terms of our Industrial Development Act. Thanks. Thank you.
Thank you. Thank you, Isaac. Any more questions from the floor?
Hi.
Perfect.
Hi, I'm Ringi from Sasfin Asset Managers. Perhaps a question for the CFO, I think. Could you provide some insight into how your origination and portfolio management strategies might change, considering the current macro environment that we're in that's been quite adverse, and also balancing your developmental mandate? What can we expect going forward in terms of how the portfolio might develop? And I think this speaks to, obviously, the chunky impairments that we've seen and you've alluded to. Thank you.
Thank you. Thank you very much. IDC remains committed to its developmental mandate. About 4 years ago, we did engage in a process where we separated our book into the book that's performing, the book that requires turnaround and restructuring, and the book that needs to be exited. And in doing so, we then created what we call value creation plans for all of our business partners, just to make sure that we are true to our developmental support, that those that we believe can be supported in distress, we continue to support them, which means we might need to invest more in order to enable them to continue to survive or to support our mandate, job creation, but also enable them to be profitable. So all of that strategy that started has not stopped, so it will continue. What we will likely change is the close monitoring especially in sectors where we've noted a significant stress and where there is focus that they are not growing sectors. But we'll have to review those in terms of the close monitoring we're doing. Origination, we continue to originate low to medium risk, and as you note, our risk model tend to be more conservative, on the conservative side compared to the commercial banks, because we have to invest in green or in developmental projects where no commercial bank want to invest in. So we have to de-risk some projects, and therefore we'll continue to do that as part of our mandate. And where it's brownfield, we'll also continue to do that. So really, we remain focused on originating low to medium risk, but where there is a case for developmental objectives, we will continue to invest in what you refer as startups or high-risk projects. Thank you.
Thank you. Makoshi, in your session, as you looked at where funding went, it was really a question on support for distressed businesses. But if I may also invite David to also engage with us. So the question we have was, earlier in this year, the IDC announced its support for the distressed business ArcelorMittal, but also indicated a due diligence process underway. The question from Terence Creamer with Creamer Media is that what's the progress of the due diligence process? If the IDC's exposure is increased, what form would this take? Would there be a look for strategic equity partners? But when will a final decision be taken?
Can I, perhaps before David comes in?
Thank you.
The IDC's investment in ArcelorMittal was a strategic decision. It was a strategic decision that we made, rooted in our developmental mandate. As I said earlier, the steel industry is foundational to South Africa's manufacturing sector. And we believe ArcelorMittal and other industries play an important role, and in this case, supplying certified steel to key industries, including automotive and infrastructure. And therefore, our support really helped support the auto sector, but also support the downstream industry with regards to really avoid the far-reaching consequences that we could have had should we have not come in as the IDC. I'll hand over to David.
Yeah, so I suppose just to the specific questions, I think you'd understand that we aren't able to divulge that much detail. Just to say that we are actively working with the various stakeholders in the sector and also AMSA. So we did announce that we are looking at our current shareholding in AMSA. So those negotiations are continuing. And to the point that the CEO has made, we do believe that our intervention facilitated those downstream sectors not being faced with a situation where those specialty steels suddenly came to an abrupt halt, and they have been able to arrange alternative inputs in the meantime. I did also want to comment on the issue of coverage that was raised earlier. So what we have seen over the last couple of years is that our deal teams are becoming more deal makers than deal takers. So they are originating transactions in line with our mandate. That's obviously really important. We obviously do accept transactions that come through the door. But at the same time, we need to originate the kind of transactions which will have the impact that we want. They're catalytic. They take forward the development of our value chains. They satisfy our transformation imperatives. So we are seeing that a greater number of transactions are being originated by our deal teams, which is something that we are actively pursuing. And then the CEO has also mentioned our continental aspirations to develop regional value chains, especially around industries like agriculture, critical minerals, where we believe that there are opportunities to develop regional value chains that will benefit both host country and South Africa.
Thank you.
It's Sivanati from RMB. So my question is linked to what Terence asked earlier. So it's really just about the role that the IDC is playing in terms of preserving industrial capacity and almost acting as a last resort lender, to industry. At what point should we be thinking about government support, coming in terms of shoring up the IDC's capital base and also the balance sheet, in terms of the activities that the IDC continues, in terms of supporting entities within distressed industries. Thank you.
Yeah, so it's an important part of our mandate. So we need to be pro-cyclical. We need to support industries of the future, which the CEO has covered. But at the same time, we also need to play that defensive role. So we don't see ourselves as a lender of last resort. We would only invest in businesses where we believe there is a sustainable outcome that we can achieve. So we do play that defensive role, and we recognize that defensive role needs to be played. So we will invest in distressed assets where we believe that they do have a future, and where it's in line with our mandate. So it's being able to cover both those spaces, looking at industries of the future, how we invest in there, and we do have a strong role in even developing those ecosystems. If you look at the green hydrogen space, where we are developing the ecosystem around the green hydrogen industry, as well as projects which will be, forerunners to that industry. But at the same time, we do need to step in. We recognize that the operating environment is a challenging one, and we do need to support industries. It's easier to preserve capacity than to start new capacity. Obviously, with the rider that it needs to be sustainable.
Thank you. Any more questions, colleagues? If none from the platform, but any more in the house? None. And
Sorry, Tsepo, I forgot the other part of the question.
perfect. Proceed.
Yes, so the other part of the question was around government support, so maybe Isaac can also comment on it. But just to say, even though we haven't been recapitalized per se, we do partner with government, and some of the funds which we manage off balance sheet from the various departments do enable us to blend those funds with our normal funding, and then offer those, offer a much more attractive proposition to our clients. So while we might look at the balance sheet and say, there's no support from government direct support, we look at that other type of support which government does provide to us. So those funds which we manage on behalf of government, once they're blended, they really do support industrial development.
Good. Thank you. Any more questions, colleagues? If I may take the liberty, over and above, and David, you touched on green industries, but within the South African framework and where jobs would be created, there's been a focus on small business funding. And obviously the CFA, SEDFA, but what is the IDC doing to support small businesses? And in the year under review, what impact has that had?
So yes, we do continue, despite the fact that CFA has now merged and become SEDFA, we do still support small businesses. across our various sectors. So we have a focus within our, particularly in our regional offices, to continue to support SMEs. And we also have rolled out a number of funding opportunities for small businesses. So we did have, for example, a fund during the period under review that supported small businesses and townships to adjust to load shedding, so funding them getting in, like, for example, solar panels and inverters. And those type of initiatives are important for us to support the SMEs, and we will continue to do those type of initiatives.
Thank you. Ladies and gentlemen, one more round. If none, I will ask that we bring this results presentation to an end. Thank you, Makhoshi, Isaac, David, to our participants online. Thank you for joining us once again for the delivery of the IDC's results presentation. We look forward to seeing you the next time when we report back on the priorities for this year, but also the impact of our funding in supporting national priorities. Thank you very much, colleagues.
Thank you.
Thank you.
Thank you. Well done. Thanks, guys.